Good morning. What's up, guys? How we doing? Hope you're all having a good morning here so far. Let's get right into it. Trump is making a few statements right now. We're getting some highlighted headlines coming through the news feed. We're looking at some Iran headlines. He's saying, I can't say whether or not the U.S. will strike Iran. We have a tremendous appetite for our debt. He says he's going to go extremely short term, get rates way down. Is he going to talk to Powell? I'm not sure what he's thinking. And then go long term. So anyway, we're getting some headlines out of Trump coming through literally as we speak. So we'll keep an eye on volatility coming out of that. How we doing, guys? Good morning. Good morning. Now, let's look at the daily quick. Bottom of your screen there. Same as it's been for basically the last couple of months. Same conversation each morning. What are we thinking? Anytime we start pressing up out of the range, it's dipping into my head. Hey, range market, right? Got to be careful. Got to be careful trading breakouts as we press outside of the range. So, you know, the ATR lately has been, when we look at this, right, a few hundred points maybe at best. Yeah, a few hundred points at best. So anytime you start pushing 150, 200 points, one direction or the other from kind of the open, you got to start thinking to yourself, okay, hey, is the other side really going to let this slide, at least for much longer? I still prefer to wait for a confirmation for a reversal. I'm not big on just shorting big pops, because if it ends up being the trend, you end up as one of those traders who's just moving stop losses and getting burned. We don't want that, right? So I like to still wait for confirmation on reversals, but I have to be hesitant taking continuation setups on the outsides of the range. Okay, but for example, if we had a continuation move upside and then all of a sudden we had a really clear reversal bear signal bar that I could justify putting a trade on with pretty big reward, relatively small risk, I'd put that on because we're coming back into the channel. All right, let's get into it. We got trades to take. So as far as institutional volume, that's all clear now. Remember, guys, today is FOMC day. Okay, so that's hitting at 1 p.m. Central Time, 2 o'clock Eastern. Between now and then, we do have crude oil inventories at 9:30 Central. That's 25 minutes, no matter what your time zone is from now. But FOMC is the big one here today. And then at 1:30, Powell comes out, starts talking. We're going to get headlines out of Powell here between like 1:30 and 2. Okay, so keep an eye out for that this afternoon. But for now, again, crude oil, unless it moves the S&P, it's not really going to move the Nasdaq. But if it comes in crazy, then it will likely move the S&P, which will budge the Nasdaq a little bit. But I'm not too concerned about crude oil here in about 24 minutes from now. All right. Business out of the way. What's up, guys? How we doing? Good morning, Peter, Javaz, good to see you guys. James, how we doing? Faba, good morning. Mitz, Eric S, good to see you, brother. Oh no, morning. Beat my threshold on Take Profit Trader, 150K account. Awesome, awesome. Yeah, those 150Ks, those are an asset, man. The daily payouts are a really big deal at Take Profit Trader, especially with those bigger accounts. Very, very nice. Good work. Worthy, good morning. How we doing? Okay. Oh, I should update you guys. So, just for context, to set the stage here for the New York session, for those of you guys who don't know, futures, the P&L starts, like for the day, at the open of the night session, and then that goes through the night, through the morning, through the New York session, and then the P&L for the day ends at the close of that day session. So this is from, if you're in the Discord, you already know this. I just updated in the Discord quick last night before I got off. But this is from a few scalps. I was sitting here doing some work and the night session opened and I was watching and I was like, eh. And I don't know, maybe 45 minutes went by. And I was looking at it and I was like, this is really clean. So I took a few scalps on it and booked up like 5.2K. So that's left over from yesterday. So it's in the daily P&L. but I'm not really thinking about that as today's P&L. So we're starting kind of fresh here. Still getting Trump headlines, by the way. A lot of Iran stuff. He's saying they have bad intentions. All right. Okay, I'm watching this. We have 65 seconds left here on this 5-minute candle. And, you know, we're right above 22. Plenty of room here when we look at the range on the daily. The overnight session range, you know, you go a little bit more to the left. Saw a bit of a peak there. Yeah, we spent a lot of time below 22 last night. So let's see how this closes. 32 seconds out. Range on these bars, by the way, is not bad. It's just... okay, listen, let's just be real. I'm going to trade normally right now. I'm not going to take it easy. But it wouldn't be a bad idea to maybe take it easy. Trump's making headlines. FOMC is later this afternoon. But for me right now, it's like I'm not going to put on a trade with those massive wicks on that doji. So any trade I'm going to put on for me is going to be relatively clean. And you know what? The random volatility based on news headlines, that's a risk every day. So we just kind of got to deal with that. But the closer, by the way, the closer we get to FOMC this afternoon, like, it's not like I'm going to be taking scalps at 12:58, right? And by the way, quick heads up, with Take Profit Trader, if you have a Take Profit Trader account, do not trade FOMC today because I'm 99% sure that they would put that off limits. And I'm sure they did. Let me look. Yep, they did. You're not allowed to trade FOMC, of course. That's like one of the big ones. So do not trade the release. 1 p.m. Central, 2 p.m. Eastern. If you have a Take Profit Trader account, or you will lose it. Jimmy, yeah, I think it's only the pros, man. It's a good question. I'm pretty damn sure it's only the pros. I'm not sure. It's a good question. When the Fed's speaking, if you're a portfolio manager, would you get rid of some of your position to keep your risk low? How would you gamble your client money before the Fed talks? Think about it. Pennies, that makes sense. But, you know, institutions, hedge funds, are positioned both directions. Okay, so if you have a fund that's positioned net short, and they go risk off before the Fed, that could actually push things higher. If they're positioned net long, and a lot of them, right, at the same time, then that could push things lower as they take risk off. So I think, you know, I know what you're saying, But a lot of people, they use that logic, and I think this is a big mistake. And they assume that hedge funds and institutions are always positioned net long. That's not necessarily true. Right? So, which again is another reason why news is 50-50. You want to be careful trading news. I don't think trading news is a good idea really ever. Because it's just so efficient, and it's so much so 50-50 that avoiding it entirely, I think, is a good idea. Yeah, there you go, Eric. Yep, only pro accounts that take profit. Again, I don't... You know, listen, guys, the take profit tests, they're not $4. You know, you at take profit, you pay the money up front. And then when you use code BIG, you got 30% off, but then you pay no activation fee when you pass it. Okay, so you're invested fully. Everything you're going to invest in that account, whether you pass or not, already when you're trading the test. So, I mean, do you want to gamble that on FOMC, which is basically a 50-50 event? I'd say probably not. I don't think that makes a lot of sense. But that's me. I would hold off and just continue to take good trades, get over the finish line, and get in that pro account, which at Take Profit Trader, a pro account is as close as you can get pretty much to having just a straight up personal account, daily payouts. It's really, really nice. Yeah, exactly, Taz. Take Profit, you need five trading days total. And no one day can be more than 50% of the profit goal. Okay, we got 27 seconds left, 25 seconds left on this 5-minute bar. Trump just ended comments about a minute or two ago. So we shouldn't have any more headlines from Trump in the short term. We're getting a couple, but I believe these are actually delayed. I'm not sure. This might be while he's walking out. So let's see how this closes here. Yeah, I'll try to get long there, and then I'll just keep this risk relatively tight. I'm gonna we'll risk that. Okay, so it's 56 micros across the board, and we'll just see if we can get a bit more of a push now that Trump has ended his comments on that little rollover setup. We haven't really started pressing what I would look at as the range so tremendously, because I mean, we look at the daily chart, bottom of your screen, we're still well within reason. So I don't think the market should have too many reservations about me getting long there. So let's see if we can just get a decent push. Risk on this trade less than 40 points. So let's see if we can get something reasonable here. Now, by the way, as far as like US-China tariff deadlines and US-EU, the US-China tariff deadline, just so you're kind of start thinking about it or are aware of it, is July 7th. It's already on the news because that's kind of a big deal. And then the US-EU tariff deadline is July 8th. So, fortunately for us as traders, in the next month or so, I'm hoping we see volatility pick up with kind of that uncertainty, which is a good thing, obviously, because we, better volatility right now is sometimes things can get a little too volatile. But I'd rather have that problem than have the market not move and going sideways, wicks all over the place, which we've kind of been dealing with on and off for the last 2 or so months. It's been okay, but volatility can always be a little bit better. All right, let's see if the bulls can get this pushing up toward, like, yeah, there we go, up toward 2270. There we are in the 60s. Okay, now again, I can adjust my kind of assessment of what probability was at time of entry, which, if we're being honest, probability at time of entry was pretty damn good, depending on how big of an ask I make. The bigger the ask I make in a range market, probability starts to fall. So, with the way that this is aligning, again, we're always living in like a fog. So, as traders, there's no such thing as certainty. There's just, we have to think in foggy probabilities. So you're always trying to kind of make the best decision you can based on what you've seen in the past and in your own data. But how easily this thing can push a little bit higher will determine if I'm comfortable or not taking it at negative reward to risk, because that changes probability. Right, and you know, I know that seems like hindsight, but I like to adjust kind of how I think about these things, which actually kind of goes against my bias, right, which is how I like to look at this. Which is why, if I'm getting long, I'm always looking at this and saying, hey, do the bears have an argument that I think is extremely legitimate right now, or maybe not so much? Yeah, okay, we're getting a little bit of wicks. Yeah, I'll plop him there. And see. We'll adjust that up a little bit. We're doing fine here on this trade. A little bit more of a push, and it'll hit us out for, I don't know, 3,000 bucks. There we are. All right, out there for a little over. What we start at, 5,200 bucks from last night. So that was a $3,200 winner. All right, let's move on. So that's where we sit now on the quote-unquote day. Right, again, 5,200 of that was from the open of the night session last night, and now 3,200-ish, a little bit more, is from right there. So, all right, let's keep going, see what we can get. Wait, hold up. Hang on, I got a coffee delivery. I'll be right back. Right back. 2 minutes. 60 seconds. Don't go anywhere. That was about 60 seconds, right? All right, we are back. Yeah, I mean, listen, we just talked about this, right? So the market, I don't even know where did I take that trade off? In the 70s? I think I took it off like here, right? Something like that. I have to look back at the footage. Got about 30-ish points, something like that. And now we're starting to press. We're starting to press that range. So I got to tell you, it really wouldn't surprise me at all if we enter a trading range. Okay, because we're seeing a lot lately. Again, you have to understand market context. Don't just blindly take setups in whatever market. It's not going to work well. The setups are important. You should understand the setups. You guys see I'm following like pretty robotic rules as far as the setups, but there's a big dynamic aspect, or I should say discretionary aspect to it. And right now, we're in a range market. We get this big dump off here. Kind of off the open, right? And then a tight push higher. What have we been seeing a lot lately when we get these tight pushes higher? Does anyone remember? Trading range. Trading range. We've been seeing them turn into trading ranges rather than hardcore trends. So I need to assume that this is probably going to turn into a trading range at some point. And hey, if I happen to be wrong and we see the biggest trend ever today, June 18th, 2025, then I will happily be wrong and just ride the trend once it becomes clear to me that I've been hit in the face and I need to start trading the trend. But for now, I'm anticipating that this is probably going to turn into a sideways range, at least for a period of time, before it either makes a second leg higher or fades. And those ranges can offer some little scalps if they're clean enough. So let's keep an eye out. Max says, Nico, I saw your video about a one-on-one coaching call with you. Where can I find info and pricing to sign up? I would love your help. Well, you know what, Max? I think probably the best way to start would be to book a consult. It's going to be a really, really good bang for your buck. And that'll get your toe dipped in. Otherwise, if you are looking for ongoing support, whenever I have a spot open up, I don't take on that many one-on-one people just because it's a big commitment for me as well. But if you're looking for a deeper, like I track all your data and I look through it all and we get on video calls once every 2 weeks. Again, I don't take that many people on, but if that's more what you're looking for, let me know. Otherwise, the consult is, I'm really, really passionate about the consults, and I will give you my full in an uninterrupted attention for the full 30 minutes, and we'll get shit straightened out for you. That link is in the chat. But honestly, for probably, well, I don't know. I don't want to put a number on it, but for a lot of you guys, I really think that the consult, for as affordable as it is compared to what you're trying to do here, is probably all you would need to actually get to the point of getting payouts. Because listen, again, I don't mean to make this sound like whatever, but every single problem that you guys are facing, every single question that I get, I have faced and had to figure out. Okay, so like it's relatively simple for me to look through these problems that you guys are having and just say, if I were you, I would do this, this, and this, and it will probably get you to a payout within not that much time. If you're just willing to put your ego aside, which that's on you. One of the biggest issues is people just trade too big, because they see people on YouTube trading huge. And the problem is a lot of people on YouTube, they trade huge because they're scaling vertically. They have like 3 Apex accounts and they're trading 8 minis per Apex account. And it's like, good Lord. The reason, like, here, listen. Like that, you know, that's not a small number. That's fine. But like, it's like, whatever. I'm scaling horizontally. Right? This is across quite a few accounts. I mean, here, look. This is the roster. So, and I'm going to continue to scale horizontally. And that number is going to be relatively volatile. Okay, I'll take smaller scalps depending on the market. I might take big swings. And we'll have when this turns into a trend day, we're going to have some crazy 5-figure swing trades when the market actually opens up and lets us do that. And when that comes, you know, I want to have that account roster up to, I don't know, I've been thinking, man. I've been thinking, can we get that to 25, 30, 40, 50? Just continue to scale horizontally. And then you're trading relatively small per account. Sure, the expenses are up a little bit because you have to pay for more accounts. But that, I mean, listen, that's the only way to do this, in my opinion. Your expenses are going to go through the roof if you try to scale this vertically, which means just buy it 1 or 2 or 3 accounts at a time and then just trade really big per account because you're going to blow them. I would also blow them. Why? Because of statistical probability. You lose 2 or 3 trades in a row scaling vertically, and the accounts are gone. Show me a trader who won't lose 2 or 3 trades in a row. It is a statistical certainty. It's going to happen. Don't think that you're going to avoid that because that's ridiculous. So you have to be able to take on a little bit more drawdown. How do you do that? What's really the only way to do that? You trade smaller per account, but it's like, but I want to make a lot of money. Then you trade more accounts. That's the answer. That's the only answer. Scale horizontally, I'm telling you, this is the way to do this. So the market's still pushing. I mean, you could look at this and say, man, should have held that trade, but I mean, I took it off. I have to look back at the footage, man, but I took it off like here. Right, we're kind of struggling to actually get quite a few more points. So right now I'm kind of waiting to see, does this turn into a trading range? I really think it's going to. If it doesn't, I'll happily be wrong. Eric, is it just me, or is it difficult to buy high, sell higher on a slow grind? No, it's not just you. When you're seeing a grind that is slowing down like this, we're getting more wicks, right? I mean, the bull bodies are getting smaller. Think about this contextually, right? The bull bodies are starting to close inside of the previous bar's wick high, which shows that the strength compared to previously, I mean, we'll see how this one closes here, obviously. But like on this bar, compared to this bar, yes, the bulls are still relatively in control, net, but they're losing strength, right? The bull body is smaller, the wick is the same size-ish, and this closed inside of the previous bull bar's wick high. So when you see slow grinds like this, it becomes less and less, and this is a spectrum, right? There's no like answer. It's a spectrum. You have to just make the best decision you can. And here we are pushing higher, so we'll see how this updates for us. But pretend this bar isn't happening right now. When you see this weakening bull push, it becomes less and less of like a buy above anything market and more of like a, okay, this is a slower, softer is the best word to describe it. Bull, like trend intraday, not to be confused with a trend market. We are in a range market, but it's an intraday morning trend. But it's weakening. It's becoming softer, so I shouldn't probably just buy above anything because the bears do have some control. It's not just a wild squeeze higher, or sometimes it is, and then it's just buy above anything just to get long. pay whatever just to get long. But in this case, it's like, okay, if I were trying to get long, I'd be looking more for pullbacks. And this is the contextual thing that is I think aside from emotion and psychology, this is the hardest part about trading. Is trying to figure out when to make one decision and when to switch that to the opposite decision with kind of the same scenario with slight differences. I hope I'm making sense. I mean, to people who don't really get anything I'm saying, this probably just sounds like a ramble, but like, this is the truth. Contextually, a beginner could look at a setup like this. If these 3 bars here were down here, I would buy it. So they might say, well, it's the same candlestick setup, so shouldn't you buy that rollover? I mean, maybe it would work, but for me right now, it's like, this is kind of weakening. This bar shows a little bit more strength, but in a range market, we're really making a push now. Again, discretionary call. This is quite a hard push, and it's tight. And what have we been seeing lately? These tight, hard pushes turn into trading ranges and go sideways. And I don't want to be too involved in that, at least with a heavy long bias this high. So it's different. You make a different call on the same setup based on the context. It's the biggest deal in trading. Michael, good morning, Nico. Made money today. Going to work. Another take profit trader. Payout on the way. I love this firm. Man, yeah, take profit is a beauty. Daily payouts, it's really, and not that many rules. I really, really like take profit. Max, how did you learn to become disciplined, not emotional? That's my biggest battle at this point. Well, Max, that's a pretty in-depth conversation. But long story short, there are little tricks, but there's not like a trick that fixes it. Trade small, trade more. Desensitize yourself. And eventually you just get to the point where you know you have edge, so you don't really care about any one trade. But you're never going to get to that point if you're not willing to, 1, put your ego aside for 2 weeks, and 2, actually try to see, hey, do you actually have an edge? I know just sitting here that a lot of you guys are probably trading in such a way where you have no clue. I get it. You have no idea what your data looks like. You have no idea if you have edge. And, you know, understand that it's not like I'm sitting here looking at this like, okay, this setup has a 58% probability of success, and I'm going to get a 1-to-1 reward to risk. That's not trading, man. If it was, this would be a really, really different ball game. And if that was even possible, anyone who understands stats could be worth billions in the market. But it's not. We're always in a fog, and we're always just making the best decision based on what our best estimate is of that equation at that very moment. And that comes into play based on the context of how things look. And a big mistake is when people take a trade and they lose. They're like, man, I guess I was wrong about the probabilities and stuff on that trade. No, you weren't necessarily wrong. It could have just been, let's say you have a coin and it's weighted. 60% of the time it'll land on tails. 40% of the time it'll land on heads. Tails is a winning trade, heads is a losing trade. If you flip the coin, you should flip the coin, right? If you're betting on tails. But if it lands on heads, you can't say, man, I guess I shouldn't flip the coin again. No, you know with certainty that it's a weighted coin, 60% tails, 40% heads. You should flip it as many times as you can. And when it lands on heads, you move on and flip it again. You can't expect it to never land on heads. It's 40%. Same thing with taking trades and losing trades. You can't expect to never lose trades, man. That's like the game. I mean, like, listen, you have to understand, like, if a trader, I don't think anyone actually claims this because it would be so ridiculous, but if a trader claims to never lose trades, they are straight up lying to your ass. And they don't even understand the business model, because if they did, they wouldn't have the guts to put that out there, because they would know how stupid it sounds. All right, it looks like Trump is actually done with comments to reporters at the White House now. He was done about 30 minutes ago, 20 minutes ago. And then I guess they dragged him back in, but okay, that's okay. So now we're getting a bigger bear bar, which is not necessarily unexpected. And knowing that we're in, now this is another one of those scenarios, right? With a bigger bull trend push, in some cases, if we were in a trend market, if this closed near its low, it wouldn't be a horrible idea to buy the close of that bear bar. Buy, not sell, right? Because you're buying a pullback. However, knowing that the context here is that we're in a range market, we'll see how this one closes. If it does close, I would not be against actually selling that rollover and risking the curl. But we gotta see how this bar closes first. That's how we sit so far. Tone, Nico, yesterday you mentioned net sell option strategies and it stuck with me hard. I'm interested in your suggestion where to start and why you don't do it anymore. Whoa, who said I don't do it anymore? It takes 15 minutes a day to manage. Net sell option strategies, for those of you guys who maybe weren't here yesterday or have never heard me say this, is literally the first thing that let me go full time. All you have to do is understand the probabilities. Well, okay, you don't even necessarily have to understand the probabilities. You just really need to understand the Greeks and then kind of understand, do you have a directional bias in this trade or not? I mean, it's a pretty in-depth world. I could sit here and discuss this for 2 hours. We're not going to. But I mean, it's relative, at the end of the day, once you get the Greeks, it's relatively simple. It's not that complicated. You just have to understand the Greeks. If you don't understand the Greeks, you shouldn't try to learn the strategies. Study the Greeks, take 12 hours on a Saturday and just drive the Greeks, the options Greeks, into your skull. Finally, where you can recite what it is when someone asks, hey, you know, what's theta? And you say, oh, theta's this. What's vega? It's this. You know, how does gamma work? It's this. It's not that complicated. Once you understand those, you can put together a few strategies. I mean, really, you can, just to start easy, you can put on some basic spreads. Credit spreads, most likely. And run the wheel. The thing with option strategies, the one thing that I'll leave you with before we go back to this, and by the way, the reason that I'm doing this all day is because the options thing, it takes 15 minutes so I can be active here. I lost my train of thought now about the options. Oh, the thing with options, net sell option strategies, is that you don't want to just, this is the best thing I can leave you with. Don't put on like one or two. You want to have a portfolio with a long list of positions, trade really, really small, and trade pretty damn often. Okay, you spread the risk and the edge that's built in to net sell option strategies. There's built-in edge, otherwise the options market ceases to exist. Okay, so the seller has to have built-in edge, otherwise no one would sell to the buyers who are getting massive leverage in return. So you don't want to put on like 2 spreads. You want to have a portfolio with a whole bunch of positions on, trading really small per position, and then that edge kind of smooths itself out over the entire portfolio. That's how I went full time the first time. Well, I mean, originally. All right, so that 5-minute bar closed with a big, massive wick. So let's see how this one closes. 3 minutes, 40 seconds out. Yeah, pennies. He says, I'm a dummy when it comes to options. I did it maybe 2 times. It was successful, but it was 100% gambling because I did not know anything about it. And I considered learning the depth into it. If you're buying short-dated options without a reason to be getting that much leverage, fundamentally you are essentially, I mean, it is kind of gambling. That's how you can gamble the easiest in the market. That's how you can use the market as a casino. People don't understand, it seems, why options were created. Why do they even exist? They exist so that you can get your hands on a lot of leverage. And the short-dated ones, by the way, the super short-dated ones, they didn't even exist for like decades. And then they introduced them and they started doing more and more expirations because the volume could support more expirations. This all happened in Chicago. But the really short-dated stuff, why do they even exist? So that you can get your hands on a lot of leverage if you have a short-term heavy bias, and or for hedging. You can hedge for relatively cheap. That's why, because you're getting a lot of leverage for not that much money, so you can hedge a big positions, hedge funds, institutions, for cheap. Let's say they have a really big long position, and they're like, man, there's tax implications if we take this off. We can't really take this off. We're gonna have to report that to the clients, but we think we have a short-term short bias, or long, and we don't really want to take the long off. They can get short-term hedging done for cheap with relatively short-dated puts. That's why they exist. Okay, so straight up going in there and buying short-dated options, you're playing a game that has to be massively tilted in the seller's favor. If it wasn't, nobody would sell you that much leverage if they didn't have a ridiculously high probability of success, which by default means that you have a ridiculously low probability of success. It is a lottery ticket. I've never been into the lottery. When you start to understand the math and the stats of it, I mean, I guess you could say, hey, if you don't play, you're never gonna win. But that's also how gambling addicts justify their gambling. When you start to understand the math and the stats behind stuff like that, it kind of ruins it for you. It's no longer fun. Yeah, man, Tasty Trade is by far, I would say, the best resource. They have, if you're like a numbers junkie, I mean, they've been running studies for, I don't know, I think 15 years about all this stuff. How do you optimize the edge with net sell option strategies? That's their entire thing. That's their entire model. So, I like those guys. kind of a big wiki close here on the 5 minute again. Still watching, see if I can get some kind of a secondary of another entry here. One trade so far on the day. You know, the thing with the option stuff, though, guys, is it really is a lot easier if you're above PDT. I'll say that. You can certainly do it below PDT, but if you ever come to a point where it's like, shit, I have to manage something intraday for the 4th time this week, you can't really do the right thing. The thing about futures is that there is no PDT rule. So for like a beginner, let's put it this way. I think the two, I really hesitate to use the word easiest, but let's use the word easiest. The two easiest ways to get to profitability, if you're a beginner, in no particular order, in my opinion, are going to be net option sell strategies. If you like don't really want to spend, I mean, you're going to have to spend some time, but maybe not too much time. And number 2, longer intraday swings on futures, like 1 or 2 a day. And you realize that, you know, for both of these, the common factor is you're probably low on time. You probably work a job and you can't really sit in front of the screen for, 8 hours a day. Those two are going to be your best bet. However, if you're serious about trading and trying to make as much money as you can trading, and you really want to dive into it, you can still take the swings, but then if you can get a little bit of edge scalping all day long, well then shouldn't you do that? If your goal here is to just make as much as you possibly can, yeah, you should do that. So then you spend more and more time, but the biggest juice that you're going to get, I'd say it's like diminishing returns, right? If you spend 2 or 3 hours a day trading, and then you spend 8 hours a day, and that extra 5-6 hours is spent just hitting little scalps, and maybe like you're an okay scalper, but you're not the best. Obviously you're getting a little bit more juice if you have some edge, but a lot of your juice, especially in the early years, is going to be from those swings, most likely, assuming you're reading price action in a way that makes reasonable sense. But I don't know. The way that I look at this is like, if I'm going to do it, if you're going to be a full-time trader, might as well be here and work and try to squeeze as much as you can. Okay, we have 60 seconds. This bar is closing near its low, relatively. So if we look at this, a close down here would put us only about 20, probably about 20 by the time the bar rolls over. Points from the 5-minute 20 EMA, which the bulls are very much so going to try to step in front of. We'll see if they can hold it. Again, I do not care about the 20 EMA. It's not like if we touch it, I would buy blindly. But as far as price action is concerned, it could be a hang-up. Now, if this was 40 points away, I'd sell this rollover. Actually, let me think about this. I can keep risk relatively tight. So let's see how this closes. Ooh. Yeah, I gotta hold off. We closed pretty much at this wick low. Pretty much at that wick low is where we closed. If we closed down here, that would shift the probabilities ever so slightly in a way that I would have sold that rollover, risked the signal bar, not the entire curl. I would have risked only the signal bar and looked for a press down into the 20 EMA for a little scalp. But the way that this closed, probabilities are just a small shift to the point where I got to hold off. Yeah, pennies. It's the same way that I cannot go to Vegas to gamble or any casino. I'll never enjoy it because I know the outcome. Once you're a trader, you begin to think in probability in and out of trading. Yes, 100%. Being a trader, it's interesting. You start to look at a lot of things in your life based on probability, the equation of probability and reward to risk. Like everything. And not in like a compulsive bad way, but in like a good way. Like it helps you, I think, make better decisions just in life. Because you weigh these things out quickly in your head. The problem with gambling is that it's fun. Okay? And the more fun you have, the more certain the house edge is against you. So like if you were on a mission to like beat the to lifetime beat the casino, unless you're gonna cheat the system somehow, the only way to do it is to play as few hands as you possibly can. And then, if you luckily end up in the green, you walk away and never come back. That's the only way, is to keep the sample size really small. Which in trading, it's the opposite, because in trading, we're the house. Okay, so again, if you go and... I think most people kind of understand this, but maybe they don't really get it fully. At the casino, mathematically, you can play two hands of blackjack, win both, leave, and you beat the casino. The problem is you had too much fun doing it, you come back, it's too tempting, you give in to the vice, and now, 100,000 hands of blackjack later, the probability of you still being green is essentially zero. It's basically zero because the edge with a big sample size plays out in the house's favor. Now with trading, if you think about it that way, now flip it. If you're taking good trades and you are acting as the house and you have a statistical edge, you are the house. So over, a 40, 50, 60, 70, again, I say this all the time, I think we're all going to live a little bit longer than we think, the way that everything's going. Career, many decade-long career, you want to take as many good trades as you can, because the more good trades you take, the greater the probability, certainty, that you're going to make money that year, for example. Which is why the whole idea of like, I take 2 trades a month, blah, blah, like it doesn't make any sense to me. I get it, because you can get more percent edge if you trade less because you're taking higher quality setups. But a lot of times these people aren't necessarily taking the really higher quality setups. They're just taking like a setup that has some edge. But if you take 20 trades a year, you could have a red year. If you have a consistent statistical edge and you take, 2, 3, 5, 10, 20 trades a day, the probability at that sample size by the end of the year that you had a red year goes way down. You just have to make sure you're retaining your edge. Right? All right, now here we are getting a bit of a push. 45 seconds left here on this 5-minute bar. Okay, now I think, what did we talk about, right? I think we're in a trading range. So, I don't want to buy with a stop limit buy above the bar because I'm giving too much away. We're in a trading range. Yeah, the more this bull bar grows, the less interested I become. Yeah, the bull bar is a little too big for me to enter inside of a trading range, so I'll hold off. If this bull bar was down here, that increases the potential risk. increases the potential reward inside of the trading range, the channel. Decreases the risk, probability stays, it falls a little bit obviously, but it stays reasonable. And I would much prefer that. Here it puts us right in the middle of the channel, and I try to avoid the middle of the channel just because probability gets a lot closer to 50-50 when we're that close to the middle. Okay, now, let's see if we backfill the entire trading range, kind of sideways, and what I would mean by that is if we push higher into this high, then we clearly have a sideways trading range most likely happening. But if this starts to fade here, then to me it looks like we have a descending channel. Which of course changes the way that I choose to scalp it. Yes. Dominic, if you're able to identify pockets in the deck, he's talking about counting cards on blackjack, and you raise your bet in those positions in order to compensate. Yeah, I mean, I think it doesn't... Listen, if you're like, I want to count cards, that life today, I think you should just really, if you're interested in making money using a statistical edge, spend that time learning how to trade. Because the casinos don't take kindly to winners. So counting cards, you used to be able to do okay decades ago before the casinos really caught on, but now, they're using automatic shufflers. And the problem is counting cards is too easy. It's not that difficult, where enough people can do it that the casinos have a really big reason to figure out a way to not let that work anymore. So, and by the way, if you find a game that could work where they're not using automatic shufflers, things like that, the casino's going to catch on immediately that you're raising your bet when the count is in your favor. And they're just going to tell you that your business isn't welcome here. Don't waste your time. Counting cards is not worth it in 2025. Just learn how to trade. It's the same business model, and you can make way more money. Way more. And you don't have to go anywhere. So don't waste your time. I don't think counting cards is worth it anymore. You'll spend your whole life traveling around the world trying to find casinos you haven't been to yet that have games you can actually beat. It's not a good life. Make way more money, be more comfortable, and you get to stay home just being a trader. See here, the bulls are kind of losing steam, which leads me to believe that, hey, maybe we end up seeing a little descending channel here, rather than kind of a flat sideways trading range. So let's see how this bar develops. Hey, Michael, you got to clarify which firm. Is this Take Profit? Yeah, for Take Profit Trader, if you've hit the goal, but you haven't hit the days traded yet, I just come in and flip a contract. Buy, sell, buy it back, just quickly, just lock in a trade without giving anything back. Or, you know, I'll take a really high probability scalp and just cut it really quickly if I need to, or take a little bit of profit, whatever. But it doesn't matter. There's no risk. There's no upside, only risk. So I prefer to just flip if I need to at Take Profit Trader, just to get a day in the books. Yeah, I mean, Dominic, the problem with this, again, why are we even talking about beating casinos? Because it's possible, but it's not worth it, and it's the same business model as trading. Maybe it was worth it, you know, in the 80s. It's just, again, like the casino's going to see what you're doing. You're betting the minimum, or you're just sitting there watching, and the casino probably knows what the count is. And as soon as the count's in your favor as a player, you go and bet 10x, 50x, 100x. If they're even half paying attention, they're going to come back you off, and you've made like a little bit of money. And now you have to travel across the state to go to a new casino. It's just not worth it. You can sit in your house and trade and make way more money and be a lot happier. Spend that time trading. Don't learning how to trade. Don't spend it learning how to beat the casino. The casino's entire goal is to take your money, and they're not going to let up on it. The market is indifferent to who gets rich and who goes broke. It just doesn't care. It doesn't give a shit. That's what you want. They're stop hunting your one micro. Okay, so I'm watching this up here, this 5-minute chart. Yeah, I mean, a test of that 5-minute 20 wouldn't surprise me here, just because that would put in the descending support pretty much exactly. this channel's pretty interesting to me. I just want to see how it develops a little bit more. Again, I really think we're going to at least see a test of that 5-minute 20. Let's see if that holds up. But I'll tell you what, I'll be back in a couple of minutes. Don't go anywhere. All right, well, as discussed, we've now tested the 20 EMA on the 5 minute. Exactly what we talked about. So here we are testing it. If we get a dump off lower, it's tough because if you get a push through here and you close like here, I'd be very interested in selling that rollover, except I know the bulls would be looking at like this. You know they're looking at that as a channel. So I don't know. I'm just curious to see how this closes. I'll leave that line drawn. If we get it closed like down here, then I think I'd sell the rollover, just risk the signal bar, keep risk relatively tight, and if we re-enter the channel, just stop myself out and we're fine. But we've got a minute 40 left here on this 5 minute bar. Let's see how it develops. Lee, good to see you. Good morning. So, I mean, you guys know, around here, I believe in scaling horizontally. Okay. What does that mean? Trade small per account, scale out the number of accounts. This deal is a little bit less than a week until it ends. 80% off at Apex is a very good deal. And I've bought plenty of accounts at 80%. 90% off, just full transparency, 90% off does happen sometimes. But it's not very often. I don't think it's worth waiting for. If you have a reasonable edge, 80% off is plenty cheap, especially when it's single day pass. You can pass in 1 day and be funded tomorrow. It's plenty cheap to make the numbers work very, very well. Of course, that's using code BIG, B-I-G. TC, good morning. You can see the bulls are trying to hold this 20 EMA here on the 5 minute. Very small bear bodies, pretty equally weighted right now, the last 15 minutes. Hey Bruce, what's up my man, how we doing? If you look at this to me looks a lot like the bears are starting to look at this. It's a relatively aggressive wedge. So what I'm actually interested in doing here, what I can do, is look to kind of fade the break of that wedge. Not fade it, but more so anticipate the break of the wedge while still catching the middle of the wedge. I would like to short with relatively small risk near the top end of this wedge. Oh, that's pretty strong. Hang on one sec. Let that develop for a second. Yeah, that's pushing. I'm gonna get rid of this. No trade there for me. About 30. Let's see how this bar closes. I want to see how this current 5-minute bar closes before I make a decision here. Because we may as well just maintain, I should say, maintain this little descending support region, because the 5-minute 20 is right there. And that wedge got broken pretty quick, this previous line that we had drawn, the tighter wedge. I still really want to get short. I just need a way to do it. That makes sense. If you guys haven't yet, please hit like on the stream. Helps out tremendously. And it keeps it free. All right, 15 seconds until this 5-minute bar closes and rolls over. Let's see what we get here out of this close. Giovanni trying to trade on a plane? Man, have I traded on I don't think I've traded on a plane. Actually, it's not true. Maybe I have. I think I have. I think I've done some managing of positions on a plane. But I've never sat and traded a full day on a plane. That's kind of nuts. Imagine the Wi-Fi goes out and you haven't set your stop. I don't think Joe needs to worry about that, though. I think he's on his jet. He's got like 3 backups on that thing. Alright, I'll get short here and just try to see if we can fade. I'm gonna bet, or that there is a bet that this little wedge doesn't give out instantly. Though we may see that occur. If it does, I'll stop myself right above this curl. I don't want to risk the whole curl. That adds another 13-ish points. But I'll put my initial risk up here. And see. So I got 56 micros sitting short. See if the bears step in and fade this back. Maybe we can see a break downside through the bottom of this little descending support that, to me, I think it's weak. But bears got to hold this first. So that's a fine little scalp. I'll leave that on. All right, currently hanging out right around that 5-minute 20 EMA. See if we can fade down through there and get another test of that descending support. Now again, ATR here on the 5-minute chart is about 20. So on these little scalps, if I have the opportunity to do so, for me, as far as probability in the whole trader's, well, whether or not that equation can make sense, I like to lean into negative reward or risk when it makes sense to do so. So let's see if we get that opportunity to do that in a way that makes sense. Meaning, I don't need this to break downside. In a range market, you're kind of taking a bet. If I took that trade and I was like, okay, I absolutely need that to break downside, I'm kind of betting on something that doesn't have a super high probability of occurring right now. Which kind of goes against the idea of scalping, right? So let's just see if the bears can take this for another little lower test. Trying to get down through that 5-minute 20. Struggling a little bit. Able to kind of move around it, but not too much follow through below. Maybe about 5 points. Me, I'm more interested in getting a little bit more juice out of it. Maybe we can break this little wick low here on that last bull bar. And then maybe pull it off right below this wick low here, as it comes into a test of that descending support. That makes a lot of sense for me. Come on, bears, you're looking kind of weak on me around that 20 EMA. Nah, Joe, I'm not a Fibonacci guy. Purely price action and self-fulfilling prophecy mentality. Bears are being a little bit weak. plop that down for a second, see if we can get a quick little fill. If we can, I'll widen it back out. Again, I like to stay exposed to big potential moves in my favor that are unexpected news headlines for as long as I can. I want that exposure. Because the stop exposure is there, right? So even if I'm scalping leaning into negative reward to risk, I like to be exposed to the bigger move potential, because sometimes, you know, you get unexpected news. And I would like the outcome of those to be as close to 50-50 as possible if I'm in a trade, because you can't expect when those are coming, right? All right, I'll move this back. Bull's getting a little bit of strength. 15 seconds out here from the close of this 5-minute bar. There's the rollover. You see those bulls closing beneath the wick of the previous bar. Which again, there's no like secret here. It's all just goes into the little equation that we then have to make decisions based on. So, also in addition to that, we're now kind of above this level. This level has now changed. It's turned into what I would call probably a bit of a flat. So let's get rid of this. And these flat tops, they tend to bust through. So let's see how we act around there, and then if I need to manage early, I for sure will. Look at this. Didn't quite get to where I would want it to. Few ticks out. Interesting little move there out of the bears. Again, not quite enough. Even if I had my tighter target set, it probably wouldn't have hit. It would have been a tick or two out. Place that for a second, and I'll move it back if needed. Again, I like to stay exposed to as much as possible. Like that big wick we just saw to the bears, that wasn't quite enough even for the smaller leaning into negative reward or risk target. That same thing can happen for 40 points, right? And I like to be, if I'm exposed to that on the risk side, I like to also gobble that up 50-50, just kind of treat the trade as a scratch when that kind of thing happens, but still to the profit side if I can help it for most of the trade. Now, obviously, when I get close, I'll move things in, just make my life easy. But a little bit more, bears. Come on now. One tick away. There we go. All right, and we are out there for a 2.2K scalp. So 2,200 bucks on that scalp. There's where we sit. Now that we're into the 5 figures, I got to adjust my window here that's showing the P&L. It's getting cut off. So we're up 10.6K since last night's night session open. So let's keep going, see what else we can grab here. Alright, so this channel to me, this looks a lot more like a descending little support and a flat top. Now these flat tops tend to be weak, but the market itself is looking, I mean, these 4 bars have me a little bit concerned for the bulls. But the bulls still have the 20 EMA on the 5, which I don't care about, but everyone else seems to, so we got to pay attention to it. Self-fulfilling prophecy, right? So right now, after that scalp that added 2.2 thousand to the P&L for the day, I need to wait to see a breakout, I think. See which direction, like, does this turn into a fade back downside for a remainder of the day into FOMC, which, by the way, is in 2 hours and 13.5 minutes? Or do we end up getting a second leg higher? I would not base what happens off of FOMC being ahead, but price action, and price action alone. So there's a wedge that I'm looking at here. I mean, I took that trade-off pretty much here at the bottom of that range. Again, when you're scalping ranges, don't make an ask outside of what makes sense in that current market environment based on like the last 30 minutes or so. You're scalping a channel, man. Scalp the channel. Don't get short looking for a 100-point breakout. That's out of context. That doesn't make sense. That's not a good trade necessarily because you're missing the context. So trade the channel. But at this point, this is turning into more of a wedge with a flat top. And these flat tops, man, they're notorious. When you get little wedges like this where you have an ascending or descending level with a flat bottom or flat top on the other side, the probability, in my experience, tends to slightly, I don't mean 80%, but slightly favor breaking the flat side. So we'll see what happens here. Jerry, how much do you profit? How much do you target for profit per account? Well, it depends on the trade. But I scale this thing horizontally, so I trade relatively small per account over, quite a few accounts. But scalps, obviously, the targets and risk will be smaller. Swings tend to have a little bit more edge than most scalps. So you put on a little more risk on the swings. And therefore, to cover that risk, the targets are a little bit bigger. So there you go. There's the attempted break at that flat top like we talked about here. The more you watch these things, the more you pick up on all of it. Really is how it works. And that in and of itself, by the way, is a big part of what the edge really is. It's just seeing these things over and over again. So, we have 2 minutes and 50 seconds left here on this 5-minute bar. Let's see if we close outside of this little flat top. Joe, looks like we've got some new people here. So if it is your first day here, welcome. Appreciate you joining us. Hope to see you in the chat regularly. Ash says, how do you place your stop loss? Is it based on market structure? Can you give an example on it? Yeah, it's mostly based on structure. Sometimes in more trendy markets, it will be arbitrary, like 40-point stop, 40-point take profit, maybe 40-60, 40-80, if it's a strong trend. But lately in a range market especially, like, you know, what we've been seeing and what we do see probably about 80 to 90% of the time in the market, it's going to be based mostly on structure, and it'll change. So if there's a really good swing trade, for example, like here, this isn't a trade I took. Hang on, let me switch screens. Well, you look at this here. If I were to take this as a swing higher, which you certainly could have this morning, I buy, and it's like, well, I could risk the signal bar and risk maybe 35 points, 30 points. Or I could just bite the bullet, risk the entire curl, and risk about 75 points on the trade. Because I think it's probably going to at least cover that higher. We're probably going to get at least 75, 100 points higher. Now you look at the probability of that and you're like, well, what do I think the probability on the trade is? And does that make sense with the reward to risk? All right, I'll risk the whole curl and expect the trade duration to be a little bit longer on average. I'll treat it as a swing. But in scalps, like here, for this trade, I think I entered up here, maybe. I forget, on that little scalp that I entered. And my initial risk was up here. I was fully willing to, maybe here, one of these two. I was fully willing to bring that in if I took on a decent amount of heat and then we curled back, which I would have, but that never really happened. We really only went a few points into the red on that trade. And then we dip lower and I take it off. So as far as what do you risk on every trade? Well, I mean, to me, it's just that equation. And I think the best way to really understand it is just watch. If you want to watch me, then watch me take a few trades. And I think you'll pick up pretty quick. A lot of it is relatively discretionary. It's dynamic. The risk, by the way, is dynamic. You guys have seen, I'll take trades like that trade. The risk on that trade was $2,000 or $3,000. Scalp, right? The edge is a little bit smaller, but there's a lot more scalps than there are swings. So on a scalp, I'll risk, you know, a little bit less because it makes sense because it's a scalp. You're looking to get less points. But if there's a big swing that I think has a pretty damn good probability, meaning 60 to 70%, I'll put on some risk. I mean, you guys have seen me risk $7,000, $8,000 in one trade. And that makes sense to do so. That's called dynamic risk. So top left, again, that's the 5-minute chart. Top right is going to be the 2-minute. Kind of heading back into that little flat top. Which tells me this market isn't quite ready to give up on the range mentality. Because that was a pretty strong bull bar closing near its high. But we're in a range market, so the bears step in and sell that, right? All right, here's the test of the 20 EMA on the 5. Again, not that we should care too much, but it is a self-fulfilling prophecy. It's a very, very heavily watched indicator, so we might as well toss it up and keep an eye on it. Man, look at this bear move here. Here, I can show you better on the execution screen. Coming back into that wedge. Chris, I can probably announce, graduated from the 1 micro gang, the 3 micro gang now. Let's go. Now you gotta start scaling horizontally. Start adding some accounts. Getting a hard push into that little descending support. Let's see if the bulls can hold it or if this gives out. If this gives out, then I'm thinking 2 things. I'm thinking 50% retracement. Got to think about that. Somewhere in this region, right? Is the 50% retracement on the day, which you may see some buying pressure. But also, I'm thinking, okay, I kind of want to try to get short. But remember, FOMC now is in 2 hours. 1 o'clock Central FOMC hits. So bulls are stepping in here, trying to hold that up, wicking that candle up in a pretty damn big way. Let's see if they can hold that up. Again, just a heads up, guys. Apex, 80% off, and you can pass in 1 day when you use code BIG, B-I-G. That ends in a little under a week. So if you're looking to start scaling horizontally and start getting these numbers up, probably about time to do so if you're using Apex. Take Profit Trader, though, as you guys know, same code BIG. They offer daily payouts. They max you out at 5 accounts, but if you need some revenue generation in your trading while you try to scale Apex to 20, Take Profit is probably the way to go. Same code BIG. That gives you 30% off at Take Profit Trader, and then you don't have to pay an activation fee. So when you pass, usually if you just buy the account normally at Take Profit, you have to pay an over $100 fee to activate the pro account, which is kind of crazy. But with the code, you pay nothing once you pass. You're just in a pro account, ready to rock. So what we should really do is get rid of this flat top here. And now we're kind of entering what you would call kind of a widening out wedge. It's expanding, which if it's expanding quickly enough, which this is, it kind of just eventually can fade into irrelevance rather than breaking hard, because it's expanding so quickly that as the bars go on, I mean, the volatility increases and it's not really too relevant anymore. That's kind of what I've got my eye on here. Joe, Nico added 2 more using code BIG. Let's go. Again, scaling horizontally, way to go. Don't scale the prop trading vertically, it's a trap. What does vertically mean? A few accounts trading big in each account. It's a trap, man. any normal losing streak that you're bound to have, 2 trades, 3 trades, 4 trades in a row, which is going to happen. Every good trader is going to lose plenty of trades in a row at some point, for sure. It's going to happen, and 2 trades in a row is going to happen all the time. 3 trades in a row is going to happen all the time, constantly. You don't want to blow accounts for doing the right thing, so scale it horizontally. Keep, trade maybe the micros in each account and just trade more accounts using a copy trader. Or a copy trader with, 2 or 3 different groups. It's the way to do this, I'm telling you. All right, guys, for those of you guys asking how to book a consult, the link is in the chat currently. I'm telling you, for those of you guys who feel like you're close, you're kind of on the edge, you may or may not have already taken a payout, but you feel like you're damn close, this is a no-brainer. That will save you a ton of money in funded accounts, blown evals, and will get you squared away. All right, guys, I'm going to go hit lunch. Come back in the afternoon, see if there's any scalps we can take. But hey, heads up, remember, FOMC is at 1 p.m. Central and Powell speaks at 1:30. That's 2 o'clock Eastern and 2:30 Eastern is when Powell speaks. So keep an eye out. If you're trading take profit accounts, do not trade FOMC. You will lose the pro account if they're pro accounts. You cannot trade take profit pros during the release of FOMC at 1 p.m. Central. So don't even try because you're going to blow the account. All right, now with Apex, they don't really seem to care as much. But I'm going to hit lunch. I'll come back and see if we can get anything kind of maybe before, more than likely after FOMC. But remember, news is 50-50. It's really, really hard to get edge in news because all the information is already being baked in and the direction of the move is pretty much 50-50. All right, keep that in mind. Remember that. It's a very helpful tip, especially in an incredibly efficient market like the futures market, like the Nasdaq. All right, guys? All right, guys, hey, stay patient. Let the trades come to you, and when they come, hit it hard. I'll see you tomorrow.